It is 10:15 a.m. Pacific Daylight Time. It's April Fool's Day, so don't go on the internet. I promise I'm not going to April Fool's your ass today. I think that's juvenile, and watching grown people in suits that do news and control the internet and media companies actually engage in this kind of behavior is really saddening, honestly. You know, it's like, this is a day where you stay off the internet. You certainly don't go to social media. But that said, here on episode 1290 of Bitcoin And, you still got to take things with a grain of salt today, because I'm gathering up news this morning, April Fool. So we'll see what the hell's going on. Oh, God, April Fool's Day. Just do away with it. Okay, so first up, we got reports that Iran's president is ready to end the war. Bitcoin responds, and oil does too. But is it true? Well, maybe. I don't know. Nobody does. See, that's the problem. Nobody knows what the hell's going on. New Hampshire, Bitcoin-backed municipal bonds. This actually might be a thing. This could happen, of all places, in New Hampshire. I hope it does. And then OpenAI has raised a record $122 billion and says that their revenue has crossed $2 billion per month. We'll get into that one. Then we're going to go down south to our friends in Latin America, where Mercado Libre has pulled the plug on a shitcoin. Then in the second part of the show, Bitcoin and quantum computing FUD. Atlas 21's got a response to the Google paper that came out yesterday and the people that are spreading that paper. And then Dorsey shares AI integrated workplace vision. Remember how he cut 40% of the workforce at Block a couple of weeks ago? Well, now they've come up with a vision for where they want to go with their company using AI. And then we're going to talk a little bit about Franklin Templeton. They're going to acquire a coin fund spinoff company. And then down to Texas, where the lieutenant governor wants to learn more about crypto and prediction markets. Looks like Texas may be the next state to tell Kalshi and Polymarket that they are not welcome. Who knows? We'll find out. First up, Bitcoin climbs on reports that Iran's president is ready to end the war, by Stacey Jones from Decrypt. Crypto stocks and Bitcoin saw sudden gains on Tuesday on multiple reports that Iranian President Mossad Pezeshkian, I guess is how you pronounce it, is, quote, ready to end the war. Exchange Coinbase has gained nearly 9% since the opening bell, recently trading at $175, and Bitcoin mining and AI hardware firm Bitdeer saw its own shares jump by more than 12%. And chipmaker giant NVIDIA, of course, saw a share gain of 5% to reach $173.80 a share. Meanwhile, Bitcoin saw a short-lived surge above 68,000 before retracing. At the time of writing, BTC is trading for $67,000. That puts it 1.9% higher than it was this time yesterday. And shitcoin number one is even up too. The news, however, about this whole Iranian president, that appeared in the Kobesi letter at 12:45 p.m. Eastern Time yesterday on Tuesday. Then in a news alert on Bloomberg several minutes later. Separately, an hour later, the Iranian government's English language account on X, Iran_Gov, shared similar news. It is described as an English version of the Padolat account on X. In a post on X, Iran_Gov and the president of Iran made the statement during a phone call with Antonio Costa, president of the European Council. Costa confirmed the phone call with the president on his own X account on Tuesday morning. Other news sources, like the Economic Times and Euronews, cited a statement released by the Iranian president's office after the call. Decrypt has not yet obtained a copy of this statement, of course, as of this writing. Quote, "We have the will to end this war, provided that necessary guarantees are in place to prevent any repetition of aggression," the Iranian president said, according to the account on X. Bitcoin was trading it for around 64,000. Yeah. And then they go back into some more stock stuff. Hold on, let's get out of the price stuff. Okay, here we go. The White House has not yet issued a statement about Iranian's president's comment. President Donald Trump hasn't acknowledged it on his Truth Social account. Midday on Tuesday, Trump shared a graph of survey responses from a McLaughlin and Associates poll showing that he's got 89% approval for his decision to use military force to remove Ayatollah Khomeini from power. Okay, so this news story is just a bit old. Bitcoin actually crossed 69,000, is back down a little bit below that, but oil has retreated substantially. West Texas Intermediate is trading below $95 as of this moment, and that's off of its high of almost $104. Of course, there are different prices from whatever oracle you're actually getting your stuff from, your price stuff. I generally use Onada, and they generally state prices are lower. So in other, like CNBC, I think is listing West Texas Intermediate at $99 right now. It doesn't matter. It's well off of its highs. And they finally, this particular set of announcement finally got oil pushed down enough that it's subdued below the $99 a barrel range. And that's what they've been fighting for. That's what I think they've been fighting for with this string of announcements that started last week. And I was talking about it yesterday. They would say something, and the price of energy in general would fall, and then it would just creep right back up, like they were trying to hold a balloon underwater, and it was just too much air, and they just couldn't do it, and it would just pop back up. And then they did it again, and then they had to do it a third time. This time, it may have actually stuck. But what do we really know about what the hell's going on with this Iranian president saying that he's ready and willing to end the war as long as he's got certain guarantees in place from the United States and, I guess, NATO and the rest of the GCC countries? Well, it turns out we don't know what the hell's going on, because Iran's foreign ministry says that Donald Trump's claim that the country has asked for a ceasefire is false and baseless. So this sends up a huge red flag. I think there are two groups of people in Iran that are vying for power. And I think the president of Iran is on the other side of that, like on the side of another group of people that are trying to rise to power, because we know that in Iran, the president doesn't have as much power as, quote unquote, the supreme leader. So I think we've got a faction fight going on in the middle of Iran right now that we don't really know anything about. But this seemed the president's side, the Iranian president's side of all this, seems to be the new regime that Trump has been talking about, although I can't really get much confirmation on that. Still, though, it does signal to me that there seems to be a fairly serious rift inside Iran leadership right now. And that cannot be helping them on the inside, because if they've got a power struggle inside while they're trying to fend off multiple attacks from the US and Israel, and God only know who else is helping at this point, then that's got to be a pressure point, because that's an internal problem as well as an external problem. We may actually get a regime change. It may actually happen. Hell, maybe Trump knew what he was doing. It's going to cost a lot of money, and it's going to put a lot of pain on a lot of people all around the world to get it done, but who knows? Again, it's a wait and see attitude, but we've got other fish to fry, this time in New Hampshire. where Bitcoin-backed municipal bond moves closer with a Moody's rating, no less. Micah Zimmerman is writing this one for Bitcoin Magazine. A first-of-its-kind municipal bond backed by Bitcoin is moving closer to issuance after receiving a sub-investment grade rating from Moody's Investor Service, marking a major step in the convergence of digital assets and traditional public finance. The proposed $100 million issuance, structured by the New Hampshire's Business Finance Authority, earned a Ba2 rating, 2 notches below investment grade, according to Bloomberg reporting. If completed, the deal would represent the first municipal bond backed by Bitcoin collateral, opening a potential new pathway for institutional capital to access the asset class through regulated fixed income markets. Under the proposed structure, bond payments will be funded through proceeds generated from Bitcoin collateral posted by borrower CleanSpark. Investors will also have upside exposure with additional payments tied to Bitcoin price appreciation. At the same time, downside protections are built into the deal. If Bitcoin's price falls below a predefined threshold, the trust can be liquidated to repay bondholders in full. Critically, the bonds carry no backing from taxpayers. Quote, no public funds of the state of New Hampshire or any political subdivision thereof may be used to pay amounts under the rated bonds, Moody's noted in its report, emphasizing that the issuer has no taxing authority to cover any shortfall. Digital asset firm Wave Digital Assets will oversee transaction administration, while BitGo will serve as custodian for the Bitcoin collateral, securing it in regulated cold storage. The structure was initially approved by the BFA board back in November 2025, positioning New Hampshire as a potential leader in integrating Bitcoin into public finance markets. Governor Kelly Ayotte backed the initiative at the time, framing it as a way to attract investment without exposing taxpayers to risk. Quote, it's an innovative way to bring more investment opportunities to our state and position us as a leader in digital finance, the governor said. The Ba2 rating underscores the core tension at the heart of the product, combining one of the most volatile asset classes ever with one of the most traditionally safest. Bitcoin has fallen nearly 50% from its October 2025 peak of nearly 126,000, highlighting the risks tied to collateral value fluctuations. But over the same period, high-yield municipal bond indices posted modest positive returns, illustrating the contrast between the two asset classes. Still, proponents argue that the structure's collateralization model and liquidation safeguards could make Bitcoin viable within conservative capital markets. The deal is part of a broader effort by Wave and its partners to create a bridge between digital assets and traditional debt markets, allowing Bitcoin to function as institutional-grade collateral. If it's successful, the issuance could establish a template for further crypto-backed municipal or corporate debt offerings, effectively creating a new hybrid asset class. Quote, this isn't just one transaction, it's the opening of a new debt market, Wave co-founder Les Borsai said when the structure was first unveiled. For now, the bond has no confirmed pricing date, but with a rating in place, the experiment to merge Bitcoin with municipal finance is entering a more concrete phase, one that could test whether traditional investors are ready to underwrite crypto risk in exchange for yield and upside exposure. Okay, let's go back up here. Downside protections are built into the deal. If Bitcoin's price falls below a predefined threshold, the trust can be liquidated to repay bondholders in full. This is very much different than what I was telling you about Coinbase and Fannie Mae, and I can't remember what clean home mortgages that were coming out, 30-year mortgages that were backed by Bitcoin, where there was no liquidation event and it didn't matter how low the price of Bitcoin got. If you were able to collateralize some Bitcoin against buying a house on a 30-year mortgage through this structure done by Fannie Mae and Coinbase, you could lose half or maybe even 75% of the value of the Bitcoin on paper, and the Bitcoin would not have to be sold, or you would not have to, and you would also not have to put up any more Bitcoin to hold that, as long as you can make the monthly payments. In this case, if these bonds are backed by Bitcoin and the Bitcoin falls below a predefined value, then that Bitcoin will be liquidated. So from that standpoint, I understand why they would want to do that. This is not the time to be doing shit like this. Unless you've got some other safeguard in place that does not force a sale of the underlying asset, then I don't think that this bond should actually be released. But that's, who knows what happens. I think a municipal bond or any kind of bond structure that's based on Bitcoin is ultimately good. Are we there yet? And I kind of don't think we are. I think there's way too much volatility to be backing something like a municipal bond to fix streets or hang new street lights or whatever it is that you're going to do. I don't think this is the time or the kind of volatility that we would want to see to be backing municipal bonds by Bitcoin, because it would force a sale. And think of it this way. If there's a whole bunch of bonds from different municipalities, and a lot of them are backed by Bitcoin, could we start seeing cascade failure effects like we do in longs and shorts, like on futures markets? I think we would. I think that a forced sale, like let's say that you got a $100 million municipal bond gets released, the public buys it, it's all thrown into Bitcoin so that the bond measure is all backed by Bitcoin, and then all of a sudden it loses 25% of its value. That shit gets liquidated. So yeah, let's say it's $100 million worth of Bitcoin, boom, hits the market. And let's say there's a $50 million bond in some other city backed by Bitcoin. Well, now there's a problem, because that forced liquidation could cause another forced liquidation on another municipal bond, and then dominoes start to fall. At the same time, you've got futures already doing that. I don't think this really levels out the volatility. I think it kind of has a tendency to increase it. I don't think this is the time for a Bitcoin backed bond. I think we should wait. But hey, I'm not New Hampshire. But OpenAI gets a lot of money. They're getting $2 billion per month in revenue. And they have a record $122 billion raise to go public. CoinDesk, who's writing this one? Shara Malwa is writing this one. Artificial intelligence giant OpenAI has closed $122 billion in committed capital at an $852 billion post-money valuation. This is a round of funding that dwarfs anything raised in private markets and cements the company as the most valuable startup in the history of startups by a very wide margin. The funding was anchored by Amazon, Nvidia, and SoftBank, with continued participation from Microsoft. SoftBank co-led alongside A16Z, D.E. Shaw Ventures, MGX, TPG, and accounts advised by T. Rowe Price. The investor list reads like a who's who of global capital. BlackRock, Blackstone, Fidelity, Sequoia, Temesk, Couture, and ARK Invest all participated. For the first time, OpenAI opened participation to individual investors through bank channels, raising over $3 billion from that tranche alone. OpenAI said that it is generating $2 billion in revenue per month. $2 billion in revenue per month. That is up from $1 billion per quarter at the end of 2024. ChatGPT has more than 900 million weekly active users and over 500 million subscribers. The company claims 6x the monthly web visits and mobile sessions of the next largest AI app and 4 times the total time spent on all other AI apps combined. Enterprise now makes up more than 40% of revenue and is on track to reach parity with consumer by the end of 2026. The company's API processes more than 15 billion tokens per minute. Codex, its coding agent, serves over 2 million weekly users. That's up 5 times in 3 months. OpenAI expanded its revolving credit facility to approximately $4.7 billion, supported by JPM Morgan Chase, Citi, Goldman Sachs, Morgan Stanley, and others. That facility remains undrawn as of March the 31st. The company framed the raise around compute as a strategic moat. Its infrastructure strategy now spans cloud partnerships with Microsoft, Oracle, AWS, CoreWeave, and Google Cloud, silicon through NVIDIA, AMD, AWS, Trinanium, Cerebras, and its own custom-built chip with Broadcom, and data centers through Oracle, SBE, and SoftBank. This is starting to look like an evil network, honestly. It just is kind of raising the hackles on the back of my neck. Meanwhile, the company said it's building a unified artificial intelligence super app that would combine ChatGPT, Codex, browsing, and agentic capabilities into one single product. The pitch is that as models get more capable, the bottleneck shifts from intelligence to usability, and a single surface lets the company translate model improvements directly into adoption. The $852 billion valuation places OpenAI above all but a handful of public companies globally. For context, that is roughly the market cap of Berkshire Hathaway and larger than Visa, JP Morgan Chase, or Samsung. The level of potential stupid here is eye-watering. This is more money than has ever been thrown at a company, I guess, before in the history of companies. This is kind of sickening. The $2 billion a month revenue stream, though, is a surprising number. How much are they actually spending on compute for that month, though? Because that's the revenue, not the net. That's gross. They're talking $2 billion gross revenue a month. And while that's a shit ton of money, there's a lot of reports saying that the amount of money that I pay as an OpenAI user is nowhere close to enough to cover the cost of the compute power that I require as a user for whatever it is, $20 a month, or I can't remember what my subscription is. But $2 billion in revenue is nothing to frickin' sneeze at. I think they may be profitable here. I want to see their net revenue, but I get the feeling that they may actually be profitable because $2 billion a month, it's a lot of cash to spend on electricity and compute. I'm just saying. But there's this other thing here where they say that this unified AI super app, the pitch is that as the model gets more capable, the bottleneck shifts from intelligence to usability, and a single surface lets the company translate model improvements directly into adoption. The way that I see that translating to all of us is, remember all the people, and this has happened like 4 or 5 times. Whenever OpenAI changes a model, and then, or not changes a model, they'll introduce a new model and nobody cares. But then they announce that they're going to deprecate an old model and get rid of it. Then people start losing their ever-loving minds. And there's been a lot of pushback on OpenAI for this. Even I was like, dude, don't get rid of 5.1. 5.1 is my friend. I like 5.1. No, it's not your AI is not your friend, but I had a decent working relationship with 5.1. And now I don't really care. I mean, 5.1, 5.2, 5.4, I've gotten better at being able to figure out how to work with these models. So it's not so big of a deal. But what this is telling me, you won't even see the model change. And I don't think people are really going to get caught, they're not really going to cotton to that. I think that's going to be a matter of serious contention, but that's up to AI to solve. What we're going to do is we're going to talk about Oshi at oshigood.us. Oshigood.us. You want some chocolate nodes? You need to go get it because there's only one left at oshigood.us. That's oshigood.us. He's also got, let's see, what else has he got? He's sold out of a lot of stuff. He is selling blocks of that Bitcoin Beans chocolate. He's got 5 of those left. He's got La Reserva 1 pound, 100% cacao blocks of chocolate. He's only got 5 of those, and it looks like he's out of all of his HODL butter. And yeah, he's out of all of his HODL butter. He's got chocolate. He has mint. Wait a minute. Nope, he does not have any mint chocolate HODL bars left. Sorry about that. The chocolate nodes are kind of interesting. He hasn't had these in a while. Think of these as HODL bars alter ego. Same real ingredients, now in 16 chocolate-covered pieces, stone ground, 70% Mexican dark chocolate. It's a favorite. Here's the ingredients. 70% stone ground dark chocolate, dates, pecan butter, 100% cacao, cacao nibs, lion's mane mushroom, cinnamon, peppermint extract, and vanilla extract, as well as sea salt. They're like these little candies. These things are absolutely amazing to look at. I mean, it's like he's got a picture of it up here. These look like pro chocolates like I would find from going to, like, you know, a place that makes custom chocolate. I've had his mint chocolate, his mint HODL bars. I've had his HODL butter. Everything he makes that I've had so far is freaking amazing. Go get yours at oshigood.us. Support a pleb. If you're a pleb, support a pleb, man, because this is a Circle P. It's open for business. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy those goods and services, but you will be buying it in Bitcoin, because if you're not selling in Bitcoin, you're not in the Circle P. Go to oshigood.us. That's oshigood.us. Use the code BitcoinAnd simply to let Oshi know that you heard about it here on the Bitcoin And podcast in the Circle P. oshigood.us. Use the code BitcoinAnd. Now we're in Latin America, where Mercado Libre pulls the plug on its crypto coin. Jose Antonio Lanz has it for Decrypt.co. Latin American e-commerce company giant quietly killed its ERC20 loyalty token 4 years in, while Nubank's Nucoin already died the same death. Sounds like people are finally figuring out that ERC20s are a colossal waste of time. Mercado Libre is shutting down Mercado Coin. The company, which is actually bigger than Amazon in Latin America, announced through its Mercado Pago wallet that the token will stop functioning April the 17th. Users holding the coin have 3 options: sell it through the app, spend it as purchase credit on the platform, or do nothing and wait for it to be auto-converted to local fiat. Mercado Libre did not explain the decision in its customer notice. Mercado Coin launched August 2022 in Brazil as an ERC20 token on Ethereum, built along with crypto exchange Ripio. The idea was simple: buy selected products on the marketplace, earn tokens, use them on future purchases, or just cash out, but it never really caught on. The token expanded to other markets after its Brazilian debut, but it never built a meaningful user base. It lived and died as a curiosity, a loyalty point system with extra steps and a dose of volatility. That last part is likely why Mercado Libre isn't abandoning crypto altogether. It's just changing what kind of crypto it bets on. In August of 2024, the company launched Mealy Dollar, MUSD. This is a stable coin pegged to, you named it, the US dollar. It's also built with Ripio and also accessible through Mercado Pago. The key difference is, of course, the price of Mealy dollar doesn't move. It's backed by US Treasury securities as well as dollar deposits, and its value sits exactly where users expect it to. Mealy Dollar is also the backbone of the company's Mealy Plus loyalty program. Members get it as cash back on purchases. They can spend it back on the platform. They can sell it in the app with no fees, or they can just hold it as a dollar hedge, a genuinely useful feature for Brazilian and Mexican consumers who watch as their local currencies lose ground. This was the logical step after a brief experiment allowing users to experiment with Paxos's stablecoin. Mercado Libre isn't alone in learning this lesson the hard way, no less. Nubank, Brazil's largest bank, a fully digital neobank with over 100 million customers in Brazil alone, ran the exact same experiment at the exact same time. Nucoin launched in 2023 on Polygon, airdropped to its massive user base as a loyalty and rewards token. And then the token subsequently collapsed 97% in its value. Nubank suspended trading in September 2024, gave holders 90 days to convert their coins to Bitcoin or USDC, and shut the whole thing down by December. 16 million users were left holding the bag. Sweetened only by a prize campaign, the bank ran to take the edge off of the pain. So there you go. Nobody wants these ERC20 tokens as freaking like reward points. Dude, just use Bitcoin. Let's run the numbers. CNBC Futures and Commodities. Energy taking the biggest hit of all things today. Brent North Sea down 3 points to $100.79 a barrel. West Texas Intermediate down 2.25 to 99.11. Natural gas is down 2.6 to $2.80 per thousand, and gasoline is down 3.75%, back down to $3.08 a gallon. Merbon crude is down 2.25 points itself. Metals are all in the green. Palladium is up 0.5 point. Gold is up 3. $4,788.08. Platinum is up 0.8. Silver is up 1.5 points, back to $76.10. Copper is up 2/3 of a point. Ag is mixed today. Chocolate is the biggest winner, 2 points to the upside. Biggest loser is wheat, 3.5 points to the downside. Live cattle up 1/4. Lean hogs up 1/3, and feeder cattle are up almost 0.5 point. The S&P, all the indices are screaming today. Well, yeah, they're pretty much screaming. S&P is up 1.19%. NASDAQ is up 1.7%. The Dow is up almost a full point, and the S&P Mini is up 1.49 percentage points itself. Bouncing around $68,000 right now, $68,240. That is a $1.37 trillion market cap for Bitcoin, and we can only purchase 14.3 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 20,009,929 and 1/4 of. Average fees per block are nominal, 0.02 BTC taken in fees on a per block basis. And I got mempool, what the hell? Where is my night vision? It's a bright, they changed it. I don't know what the hell mempool is doing, but I used to have this on like night, where the nice black background, everything was beautiful, and they've done something to change it. So either my computer or my browser has decided to not figure out how to render this thing properly, or mempool changed something from yesterday to today, and I don't like it. It's too bright. It's killing me. But there's about 12 blocks carrying 26,000 unconfirmed transactions waiting to clear. High priority is 1 sat per VByte. Low priority is going to get you in at 0.1. Mining hash rate is, if it'll actually ever tell me, 1.02 zettahashes per second. Yesterday it was 1.01. And again, I asked the question, where are all these supposed miners fleeing to? Because I keep hearing reports about how the hash rate is losing miners. I'm not seeing it. I haven't seen it for 2 weeks. I'm not seeing it here. I'm not seeing it today. For the love of all that is holy. From When VCs Attack, yesterday's episode of Bitcoin and Speedy gives me 899 sats, says nothing. Thank you, Speedy. Jason High with 250 sats says nothing. Thank you, Jason. Richard Whitman with 200 says, sending sats from my quantum computer. Have fun playing with your quantum. Nick Dose with 182 says, cheers. Cheers right back at you. Noster Gang with 101 says, thank you, sir. No, thank you. Nakaz 18 with 100 sats says, live aloha, or that actually may be live aloha. You know, the English language can be confusing that way. And that is the weather report. Welcome to part 2 of the news that you can use, where FUD exists. Atlas 21, Bitcoin and quantum computing, FUD, courtesy of Google and the Ethereum Foundation. The Google Quantum AI team has published a paper estimating that fewer than 500,000 physical qubits, roughly 20 times fewer than previous projections, would be needed to break the elliptic curve cryptography used by Bitcoin. The media then ran with headlines like, quote, Bitcoin cracked in 9 minutes. It's worth examining who signed the paper, what it actually says, and how far it sits from, actual reality. Among the study's authors are Google researchers Ryan Babouche and Hartmut Nevin, but also a guy named Justin Drake. Now, Drake identifies himself in the paper as a Bitcoin security researcher, a rather creative credential for someone who works for the Ethereum Foundation. Drake himself, in his comment thread on the paper, let slip that Bitcoin proof of work is cooked, that Bitcoin's proof of work is finished. That's a statement that betrays more of a narrative agenda than impartial scientific analysis, especially given that the paper itself acknowledged that Grover's algorithm-based attacks on Bitcoin mining remain impractical for decades to come. Drake is also the architect of the Ethereum Foundation's post-quantum roadmap, launched 1 week before the paper's publication via the portal pq.ethereum.org, with 8 years of declared research, weekly DevNets, and $2 million in research prizes. He is simultaneously co-author of the study quantifying the threat and designer of the proposed solution, at least on Ethereum's side. The conflict of interest is structural. Giacomo Zucco, president of Plan B Network, an early Bitcoiner and crucially a physicist, is among the most forceful voices dismantling the quantum FUD narrative in a series of posts published in the hours following the paper. Zucco put the numbers in perspective. Quote, a single logical qubit with a sufficiently low error rate to pose a practical problem for SEP 256K1 has no credible engineering roadmap to exist, let alone 1,200 of those qubits that are in coherence, end quote. His forecast, by 2029, and even more so by 2027, Taproot UTXOs with exposed public keys will be perfectly safe. When a user asked about the probability of a quantum computer posing a threat before 2030, Zucco's answer was 0.001%. He said he would be willing to bet on that prediction, provided a trustless mechanism for doing so could be found. The reality is this. Today, there are approximately 96 entangled logical qubits. The coherence gap relative to what would be needed to execute the attack prescribed in the paper is around 100,000 times. Meanwhile, BIP360, a proposal for quantum-resistant address formats, is already live on testnet. As summarized in TFTC's analysis, quote, the protocol will be ready before the computers are on. Paradoxically, the real risk tied to the quantum narrative is not the quantum computer itself. As Zucco noted in a previous interview with Atlas 21 on the sidelines of the Plan B forum in Lugano, quantum FUD is at best useless and at worst actively harmful. If government bodies or foundations with specific interests manage to push for the replacement of current cryptographic algorithms with newer, less battle-tested, and potentially compromised quantum-safe algorithms, the damage would be real. Adding new algorithms in parallel to existing ones is prudent. Replacing them under the pressure of an artificially constructed emergency, quote, would look like an operation orchestrated by three-letter government agencies, says Giacomo Zucco. Bitfinex analysts offered an aligned reading. Quantum computing is an engineering challenge, but in its current form, it is far from being an existential threat. Peter Todd, a Bitcoin Core contributor, noted that quantum computers capable of breaking modern cryptography simply do not exist. The question worth asking is not whether Bitcoin will survive quantum compute. It is, quote, who benefits from building an apocalyptic narrative around non-existent machines, non-replaceable or non-replicable estimates, and papers co-signed by parties with clear conflicts of interest, end quote. The answer lies in the signatures at the bottom of the document. That's the end of the article. I wish they kind of would expand it on that last little sentence there, but Atlas 21 didn't. All right, so there's two extremes here. One coming from this, as of yesterday, represented by Google and the Ethereum Foundation, and two very well recognized computer engineering schools, one at MIT and the other one at Stanford. Right? I think the one was MIT. I know one was from Stanford. They're just basically ringing the doom bell, and we're all going to die. And Bitcoin is just not going to make it, and all cryptocurrencies, except for Ethereum, I guess, they're all dead. Then we've got the other extreme, represented by Jaco Zucamo in his statement that said, by 2030, what is the percent chance that any quantum computer can break elliptic curve cryptography? And Giacomo Zucco's answer was 0.001%. Neither one of those camps is correct. Is somewhere in the middle. Here's the thing. We were talking about quantum computing before we actually started seeing quantum computing FUD in mainstream media like we see it right now. Hosted by people like Nick Carter, who is in more need of a blowjob in a fucking zoot suit than any man alive on this planet right now. But be that as it may. We have been talking about this. We have been concerned about this. At least a year and a half to 2 full years before we started seeing the first amounts of mainstream media FUD about quantum computing. Dude, the guys that are writing code for Bitcoin are fucking well aware of quantum computing. They've been tossing around ideas, and now we've already got one live on testnet. We're going to be fine. Again, I reiterate, if somebody out there is so freaked out about this, then fork Bitcoin, completely replace the signature set with quantum resistant, whatever it is that you need, and announce it to the world and go on your merry way. Honestly, it's that easy. If you're so concerned about this, then fork the chain, copy, take a snapshot of everybody's coins like they used to do back in the olden days, right before Bitcoin Cash came out, so that we'll have quantum resistant signature coins on this other chain in case anything happens. Would I trust it? Probably not, because it's probably going to end up being built out of fear and tension and anxiety and a need to just get something out. But hey, if it makes you feel better, you go ahead and do that. We don't really need to worry about what's going on right now. But if you are, here's what I would worry about. If no developer on Bitcoin was doing anything today. But that's not the case. They are, and they have been for 3 years. So everybody take a breath, man. It's going to be fine. Except for the 40% of people that got laid off from Block. They're kind of looking for another job right now, and my heart goes out to them. Meanwhile, Dorsey shares AI integrated workplace vision just weeks after Block cut 40% of its staff. This is Cointelegraph. Block co-founder Jack Dorsey has shared his vision of a future workplace where artificial intelligence could take the role of middle management weeks after the company cut around 4,000 employees because AI. In a blog post on Tuesday, Dorsey and Block's lead independent director, Raouf Botha, sounds like a Star Wars character, said that AI can track projects, identify issues, assign work, and share critical information faster than humans, adding that Block is in the early stages of transitioning toward a model where the technology performs these tasks. We're questioning the underlying assumption that organizations have to be hierarchically organized with humans as the coordination mechanism. Instead, we intend to replace what the hierarchy does. Most companies using AI today are giving everyone a co-pilot, which makes the existing structure work slightly better without changing it. We're after something different. A company built as an intelligence or a mini AGI. Artificial General Intelligence is what I think AGI stands for here. I'm pretty sure I'm right on that one. Many tech companies have been trimming roles, citing AI as the reason. A Block cut 40% of its staff in a major shakeup in February, a decision Dorsey attributed to the rapid acceleration of AI at the company and the need to stay competitive. In March, some staff who lost their jobs at Block in February were quickly brought back. Dorothy and Botha both said that while AI may play a large role in the proposed company model, people will still be involved in making key business and ethical decisions. Employees would also be recognized or reorganized into 3 roles. 1, individual contributors who build and maintain operating systems, and then directly responsible individuals who are tasked with solving specific problems and have the freedom to use any resources needed. Then there will be player coaches, and they will perform some manager-like duties such as mentoring and supporting other workers, but they will also continue to write code and build. Quote, we believe the pattern behind this, a company organized into an intelligence rather than a hierarchy, is significant enough that it will reshape how companies of all kinds operate over the coming years, Dorsey and Botha said. Most companies operate using a hierarchy. Information flows from workers to managers and then to executives and back down the chain in the same way. Dorsey and Botha argue that this structure has proven effective in the past. However, AI can perform these tasks much more efficiently and provide benefits such as real-time pictures of how a product is performing rather than waiting for managers to pull reports, make decisions. Quote, in a remote-first company where work is already machine-readable, AI can build and maintain that picture continuously. What's being built, what's being blocked, where resources are allocated, what's working and what isn't. Companies can move fast or slow based on information flow. Hierarchy and middle management impede that information flow. The question was never whether you needed the layers. The question was whether humans were the only option for what those layers do. They aren't anymore, both Dorsey and Botha said. That's the end of that article. I like how they had to bring some people back, but that didn't make the news. I didn't know that. I knew that they cut 40% of the workforce, but I had no idea that they hired some of those people back. I find that rather interesting. So what broke internally that you needed, oh my God, humans to come back and fix your little red wagon? All right, well, I'm not all that upset with Jack Dorsey and Block for doing this, but I got a question. When I read this article, when I was scanning for news this morning, I was reminded of a survival podcast episode that came out. I want to say it was the day before yesterday or the day before that. In fact, let me look here. The Survival Podcast. Survival Podcast. There it is. This is Jack Spirko's podcast, a podcast I've been listening to for years. And he had an interesting read on here it is. An interesting read on, well, the episode is named Surviving and Thriving in the AI Revolution. That's episode number 3824, and it came out March the 30th, right? So what was that, on Monday? Yeah, Monday. So Surviving and Thriving in the AI Revolution, it's episode 3824. I highly recommend people go listen to it. It's the Survival Podcast. Jack Spirko is the guy behind the Survival Podcast. It's episode 3824. Go listen to that episode and see what he says about this. Because he's taking a completely different opposite view of the way Jack Dorsey is looking at it. And I don't remember him mentioning Jack Dorsey or this news story. Because he wouldn't, because I don't think Jack Dorsey said anything until yesterday about all of this. But in either event, Jack Dorsey is talking about removing these people and for information flow and a couple of other things. Jack's take is something that is a little bit more organic, as if for anybody who's listened to the Survival Podcast, you would know that it's going to be a more organic take. And that's like, he basically frames it like this. Let's say that I can, as a consultant to your company, I can come to you with two choices, and you can only pick one. The first choice is you can cut 30% of your staff, and everything in the company remains completely the same because AI takes over whatever it was these people are doing, it executes it flawlessly, and everybody is happy. And you have the exact same revenue on a month-over-month, quarter-over-quarter, year-over-year basis. Your costs don't rise. Your sales don't fall. Everything stays exactly the same. You literally net the exact same revenue from the exact same gross revenue as you did. Maybe even more, because you're getting more revenue because you cut this 30% of these people. Or the other choice is this. You cut no one, and you make everybody at your organization 30% more effective and efficient by providing them the training in AI and the tools of AI, and nobody has to get fired. Which one of these do you want? Do you want to cut 30% of the people, or do you want to retain everybody and make them 30% more efficient and effective? Now, in Jack's case, he said if somebody selected the first one and said, I don't want to make any more money, I don't want to make any more gross revenue, I don't want to make better product, I want everything that we do today to be exactly the same, I just want to get rid of 30% of the people so that I make more net revenue. Jack said he would not work with that company. He wouldn't even want to talk to them. Because honestly, and I agree with him, that's a dumb thing to do. When you can empower people on the other side of that and retain everybody and say, we want you to use these tools. And he also says there's going to be people that just back themselves out of the company all by themselves. They don't want to use it. They know that if they don't start learning how to use it, that they're not going to be at that company much longer because whatever reason, and the attrition will just happen by itself. But the people that do remain, the people that do want to learn how to use this stuff, the people that can use it effectively, and if you learn how to use it, you'll find a way to use it effectively. I promise. I use this shit every day. It depends on your attitude towards it. If you got a really terrible attitude towards it, well, actually, if you've got a really terrible attitude towards it, you may be the kind of person that wants to kill 30% of your workforce and just install AI in their place. That is a bad deal. I don't think Jack did himself any favors. I do like how he's thinking about information flow. And I do like changing the paradigm of how hierarchy looks in a company, but he didn't have to cut 30 or 40% of his people to do that. So again, go listen to Surviving and Thriving in the AI Revolution, episode 3824 of the Survival Podcast by Jack Spirko. Go check it out and see what you think about it, because there's more than one way to skin this cat. Moving to Franklin Templeton acquiring Coin Fund spinoff for their institutional crypto push. Micah Zimmerman, Bitcoin Magazine, says that Franklin Templeton has agreed to acquire 250 Digital, a crypto investment firm formed from Coin Fund, according to Wall Street Journal. The goal is to improve its digital asset strategy and create a dedicated institutional crypto division within Franklin Templeton. And if you don't know who Franklin Templeton is, go look them up on Google. They want a complete cryptocurrency division at this point. And Franklin Templeton has always been kind of friendly to Bitcoin, and it looks like they might be getting a little friendlier. The deal sets the foundation for a new business line called Franklin Crypto. Oh, God. The unit targets pensions, sovereign wealth funds, and large institutional investors seeking exposure to digital assets through regulated investment structures. Terms of the transaction remain undisclosed. The acquisition reflects continued expansion by traditional financial institutions into crypto markets despite a prolonged drawdown in digital asset valuations. Yeah, they feel safer down here than they did up at $126,000 per Bitcoin. I know it's for a lot of people that may not make any sense, but now they're going, okay, a lot of the pressure that we saw built up at 126,000 is now gone, exited the system. We're down by half. This is when we start to build. And it ain't just Bitcoiners. People like Franklin Templeton are doing it now. It's just going to keep on moving on. So we either get left behind or we keep on moving. If you already hold Bitcoin, especially on private keys, you're already there. At this point, I just kind of advise if you're not trying to figure out how to learn how to use the AI tools, please do so. For the love of God, please do so. Again, there is, in fact, check here, look. For $300, you can go to Jack Spirko's website. No, he's not a sponsor. All right. He's a guy I've been listening to for a very, very long time, since 2013, maybe even 2012. I mean, I've been a long time listener of it. I like the guy. He's taught me a lot of shit. And I took his class on AI. It's not like I didn't know how to use it. I just wanted somebody else's take on it. And he's got a pretty good take on it. And so, I don't know, I think it was he's had 3 or 4 of these classes since then. I took the very first one. I was in the very first cohort. I paid $100 for it because he was testing it. Does anybody want this shit? And he filled up the class. It only takes 100 people. And the next class is coming up, I think, in May. And if you go to the survivalpodcast.com, you will find an advertisement for his AI class. I recommend it. It's $300 now. And he still only takes 100 people. So if you want somebody else's take on how to use this, especially from somebody who's coming at it from how to use it inside your existing business, how to use it to build your own business, then go to survivalpodcast.com. Use coupon code Bitcoin and just do it. He doesn't know I'm saying this right now. See, I want to see what happens. If you buy his class, and I recommend it. I bought it. I took it. I got a lot out of it. Use the code Bitcoin and let's see what he does. Let's see if he knows what, because I've had him on my show and I've been on his show a couple of times. Let's just use Bitcoin and, take the class for $300. It's like 40 days and you get a prompt every weekday for 40 straight days, man. It's actually a really good class. I can't recommend it enough, but we're moving on to Texas Lieutenant Governor Dan Patrick. He's calling for a study of crypto and prediction markets, and this is Cointelegraph. The lieutenant governor of Texas and president of the Senate has called for lawmakers to study prediction markets, crypto, and blockchain as part of legislative priorities ahead of the state's next session beginning January 2027. In a Friday announcement, the lieutenant governor's office issued 2026 interim charges directing Texas Senate committees to examine key policy areas ahead of the next legislative session. Patrick said that the charges were intended to advance the priorities of Texas's conservative majority, including the analysis of prediction market and digital assets. According to the charges, Patrick asked lawmakers to focus on closing gambling loopholes by studying the sudden inundation of prediction market gambling and the exploitation of federal law to circumvent Texas gambling prohibitions, including those related to election wagering. As part of a broader financial technology initiative, he also called for evaluating how Texas coordinates with federal crypto regulations and examining the role of crypto kiosks in the state. Texas has become or has some of the strictest laws in the country concerning sports betting and gambling, which is largely restricted to casinos on Native American reservations and the state's lottery system. Many gaming authorities in other U.S. states have filed lawsuits against Kalshi and Polymarket over sports and election wagering, but Texas was not among them as of Tuesday. The legislature in Texas meets every 2 years and is scheduled to return for a 140-day session, January 2027. In its 2025 session, lawmakers proposed the Bitcoin Reserve Bill, which was signed into law by Governor Greg Abbott in June, in case you forgot. It is also, or rather, AI is also under scrutiny as Anthropic plans a Texas expansion. Among Patrick's charges, it includes a study of the impact of AI on the Texas workforce and its implications for economic competitiveness. I'm pausing to say, I hope Dan realizes how much energy it takes to run these things and that he's going to look at that too, but maybe not. I'm not the biggest fan of Dan Patrick. He's a little dirty. I'm sorry, the man is. He's a little shady. And he's been shady for fucking years. But hey, at least he's got his foot in the door here when it comes to Bitcoin. The notice comes as reports suggested that Google would support a multi-billion-dollar data center in Texas leased to Anthropic. The project, expected to exceed $5 billion initially, comes as many mining companies in the U.S. are pivoting to AI and high-performance compute amid increasing mining difficulty and falling crypto prices. So there you go. Our illustrious Lieutenant Governor Dan Patrick is going to save the day by charging the Texas legislative session of 2027 to look at all this stuff. And I wonder if a damn thing will come out of it. But yes, in case you forgot, Governor Greg Abbott actually did sign the Bitcoin Reserve Bill into Texas state law. So Texas is still doing pretty good. And one of these days, God willing, I will be able to move back to my home state. State that I was born in, the state that I don't like being out of. If you think I like being in Eastern Washington, you're fooling yourself. It's pretty. And yes, the people are nice. It's not Texas. There's something about, and for my part of Texas, which is West Texas, that's the desert Southwest. I miss being this close to New Mexico. I miss being this close to Southwest Colorado. I miss the sunsets. I miss the wild thunderstorms that would basically portray the absolute power of God. And you could see it from miles away. And you could see power in a way that you don't see in a lot of places. It rains in Eastern Washington. I've heard maybe a total of 10 bolts of lightning or, 10 thunder strikes. Yeah, dude, that's like 30 seconds on a good day in a good thunderstorm in West Texas. I miss it, man. I want to go home. I'm homesick. I am a homesick Bitcoiner right now, and I want to go back to Texas. So every time I read a story about Texas, It just makes me miss barbecue, miss the thunderstorms, miss the sunsets, and I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.